Welcome back to yet another video. This is gonna make 6 or 7 videos in a 24-hour period. You can tell I'm a little bored. It's like I'm getting better. So I'm like, and I'm doing these because it is time. Time is of the essence. We're close to the bull run. And I want to help people try to maximize their profits this cycle if they're interested and if these things pan out. So I want to talk about these. In this video, I'm going to talk about Bitcoin miners. I haven't really talked about these too much, but I want to go through several of the top ones, show you what they did in terms of a return, and show you when they kind of kicked off last cycle that could provide, might just provide some insight as to when they kick off this cycle. There are no guarantees. Nothing's ever going to be the same. And it's not going to repeat exactly the same way, probably. But now that I've said that, maybe it will. As usual, this is not financial advice. For fun and entertainment only, as Retire on Dividends says. So right now we're looking at one particular miner. Well, they're not technically a miner. This is Canaan. They actually make mining equipment for the Bitcoin miners. And you can see that they really popped off starting in January, mid-January, or actually beginning of February, which is very interesting because it's a later start than other Bitcoin miners. I wanted to point this out because if we have this type of delayed start, look at the return you could get. I mean, you're going from like, if you get in at like a $5 point and you're selling at like, it's even like a $20, $25 point, you're making a 4 to 5x on whatever profits you got out of the last investment you cashed out of. So if you cashed out a little bit or all of your LTC on BCHG or whatever, and you want to go into these things before they pop off, well, you have an opportunity. There's no guarantee this thing's going to hit the same heights that it did last cycle. I don't know, but I'm just pointing this stuff out as an opportunity. I'll talk about a number of Bitcoin miners here. I just want to show you, like, the nice thing about Bitcoin miners is liquidity is awesome on these things. They have huge market cap. So, like, for example, today the volume was 21 million shares. Well, that's, we're at $2 a share. So we're doing 45 million maybe a day in volume. You should have no problem cashing out. And this is a smaller company in the mining business. And technically they're not a miner, like I said. But let me just take a couple others. You can see a sea of red today. This is, I'm sure you love it. Let's take a look at Hot 8 down here. Let's just take a look at this. And I just bought just a few shares of each of these. So they stay in my brokerage account. I am reminded of the current price and they're easy to get into when it's time, if I decide to. So what Hut 8 did, they started earlier than Canaan, right? So they started back, actually they started late again. They're actually later than Canaan. So yep, later than Canaan. I'm going to show you a little document I put together that kind of outlines this. They kicked off in July, of 2021 at $20 a share. And on average, maybe you could cash out at, let's say you were to cash out at 50 some. So you're doing like a 2.5x. Reasonably, you can get in there like with what Hut 8 did. So check this out. I'm going to go over to this. I put together, this is just like a cheat sheet. What happened last cycle. And I didn't even include the returns for CleanSpark, Marathon, Riot, or Cypher. I didn't do that because they basically all kicked off, from what I can tell, at the same time. Cypher wasn't listed until January 2021. So I'm just going to assume all these things basically kick off with the altcoins, which means they could be pretty close to LTCN and BCHG kicking off. But if they aren't, do some research and maybe you can get into them if they haven't popped off yet. But the three of the ones that I want to point out in particular, look at the dates here. Look at how these things are offset. So most of the miners, CleanSpark, Marathon, Riot, and Cypher, they kicked off, end of November, beginning of December of 2020. Cypher, I'm not exactly sure when. They weren't listed until January 2021, and they were already pumping at that point. I'm just going to assume they probably went at the same time as the others. But you notice there's a gap here, and gaps are what you can leverage to increase your gains if you cash out of one thing and you're looking to get into the next thing. So Canaan, was quite a bit down the road. If you're cashing out of something in December and you've got basically a full month to get into Canaan, you can, last cycle, you could have gotten a 3x, right? Off of your profits, whatever you cash out of. Then you wait a couple more months and you go into Wolf, and you get a 2.5x. If you cash out there quick, you could have gotten another 2x in Hut 8. So let me just take you through, again, I don't think things are going to happen in the exact same order, but here is an example of what you could have done last cycle if you had cashed out of LTCN and BCHG with a 10x, for example. right out of the gate at the end of November, early December of 2020. So let's say you had a 10x return in LTCN and BCHG. Take it over to Canaan for a 3x. Now you're up to 30x total return. And you go over to Wolf, you get a 2.5x there. That's, what is that? 75x return. Okay. Then you bump it over to Hut 8, and for a 2x return, you get a 150x return. You started out with a 10x return, you cashed out of BCHG and LTCN. And at the end of basically June of the next year, within just like 7-month period, you have a 150x return. Good luck getting a 150x return in anything that you can find in your brokerage account, including the Grayscale Trust. I just don't think a 150x is going to happen. It'd be awesome, but I'm not going to count on it. This is how you can amplify your gains, by jumping around and rotating into assets that have not popped off yet. And I wanted to talk about this because the miners are so important. They have massive volumes, and liquidity is amazing, way better than the Grayscale Trust. Okay, so you're not going to have issues. You shouldn't have any issues cashing out of these things if you get into them. And even, a 2x return is solid. Try getting, people would freak out if they were in Microsoft or Apple or Tesla and their investment doubled in the course of a couple of weeks. They'd absolutely freak out. And if you daisy chain these things, you go, like I said, you amplify yourself. Like I say, you start with the 10x gain, you multiply by 3, you got a 30x gain, multiply by 2.5, you got a 75x gain. And 2x again, you get a 150x return. Again, these are tax-free returns. Like if you're in an IRA, I'm definitely going to be looking to exploit, so to speak, these hops and jumps that you can do between different types of crypto-related assets. This run, like I said, I'm going to take advantage of it because it only happens once every 4 years, and investing is going to get boring as hell after the crypto run is over because the returns are going to be measly in comparison to what you can get. So I'm like, if the stove is hot, use it, man. Whatever. Is that even an expression? I don't know, but I don't think it is. So, but this is just like what happened last time. May not repeat the same way this time, but these are the mining companies that I have in my radar. I bought like 1 or 2 shares of each of these just to have them in my brokerage account, so I'm always reminded of the things that I should be watching in terms of price action so I can make some decisions with my investments. And again, I'm probably not going to do rotation in my taxable account, my big account. I'm just going to do it like in my Roth IRA, my son's Roth, maybe my son's UTMA account, although I don't know. I'll have to think about it because it is a taxable account. I don't like paying more taxes to the government than I have to, but I'm like, I might as well take advantage of it. So I might do it in his UTMA account too. We'll see. But I'll keep you guys informed as I make moves on things. Let me just go back to Fidelity real quick and just take a look. So Hut 8 is another big miner, right? And so we had over 4 million shares traded today at over $20 a share. They're trading like $90 million in volume today. Today, $90 million. You're gonna have no problems getting out of Hut. Same thing for like Clean Spark, Marathon. Now these things popped off. Clean Spark, Marathon, they popped off kind of at the same time. If you look back at the charts, so this is where you got to do the research. Right at the beginning of December, right, just after LTCN and BCHG took off. So if you were in a BCHG, LTCN, and you took some profits off and got right into Clean Spark, man, you did pretty good. You could do pretty good. You went from like $9 up to, if you cash out at 26, it's almost a 3x. So you could have amplified your gains. You know what I'm saying? Like this is like you're going from a 10x to a 30x like pronto, and then you can move into some other asset that has not popped yet that's still part of the crypto cycle. So just to recap, some of the things that are in the crypto cycle that are available are crypto-related stocks like Coinbase and MicroStrategy. Now, whether or not those are going to be good investments to get into by the time we cash out of anything else remains to be seen. I don't know. I guess we'll have to make a determination when we get there, and just do our best guess because we don't know. Nobody knows what's going to happen. But the other trusts, secondary trusts that I talked about, like HZen, ZCSH, ETCG, the Ethereum Classic Trust, and Mana, are options. They're smaller trusts, way smaller in terms of market cap and liquidity than the Bitcoin miners. So keep that in mind. Bitcoin miners are, I think, a solid option to get into. Now you're not probably going to get like a 30 or 50x possible return out of a miner like you could potentially get out of a secondary trust if you get in there and like Mana or ZCSH goes crazy. But those are also smaller trusts with liquidity issues too. If you're trying to cash out a lot, it might cause issues, you know. And I've talked about that before. But this is why, you know, I think it's wise to take a look at the Bitcoin miners that are out there and make some decisions and figure it out. So I'll just, you know, keep it in mind. And I'll probably cover this stuff a little bit more, you know, in the future. But Marathon's another big one. You know, take a look at their stuff. Again, they popped off at like the same time. A bunch of these popped off at the same time. Let me just go back to that little cheat sheet I made. So Clean Spark, Marathon, Riot, and Cypher basically launched at the same time. I'm assuming Cypher would too. May or may not happen again that way this cycle. And they might be offset, in which case if they are, and you've got capital that you're looking to put into an asset, these could be good plays. And if you don't know which one is going to pop off, there's potential, like if you've got like 5 miners to choose from that haven't popped off yet, and you've got like $5,000, right, to invest that you want to roll over, well, stick $1,000 maybe a piece into each one and see what happens. See which moves first, and then if you want, take profit from the one that moves and move it into the ones that haven't. You know, and that's one way to do it too. So anyway, I just want to give these options for you guys, options for you guys, because, like I said, this is like. Crypto, it's basically on a 4-year cycle. This stuff isn't going to come around for 4 years. And we don't know what the next cycle is going to bring us, so make the most of this one. Anyway, that's it for now. I got to go back on kid duty. Hope you guys are doing well. I'll catch you in the next one. Take care.